Dear students, good morning to you all. Now I am going to the accountancy introduction. Accountancy is an art of recording, classifying and summarizing the business transactions of money nature in a systematic and scientific manner and interpreting the results thereof. So, the accountancy is an art of recording business transactions. Transaction means transfer of money or money worth from one to another. Whatever we purchased goods or whenever we sold goods, we purchased this furniture. These are all called transactions. Whenever transactions are happened, they are all recorded in accountancy. In accountancy, first we have to go through identification of transactions. Identification of transactions. That means what transactions are going on, what is happening, they are all to be identified. Then they are all recorded in journal book. Recorded in journal book. These are only called entries. These are all called entries. Next, all the transactions again, they are all posted in the ledger. These are only called accounts. All the accounts are balanced. From these balances, a trial balance is prepared. Based on trial balance, final accounts are prepared. You know, final accounts means steady account, profit and loss account, balance sheet. They are only required to know the results, whether we got profit or not, what is our financial position. They are all understood through final accounts. So these are the steps involved in accountancy. The entire steps, all these steps are called as accounting process or accounting cycle. Understanding or not? First we have to go through what are the transactions are going on. They are all recorded in the journal. Again they are all entered in the ledger. They are all posted in the ledger accounts. Then they are all balanced. From these balances, a trial balance is prepared. Based on trial balance, final accounts are prepared. Okay. Now, before going to accountancy, first I want to teach you a small topic which is called accounting concepts. Accounting concepts. Accounting concepts are nothing but the accounting principles, what we have to observe, what we have to follow when we are doing accounts. Accounting principles, first we have to follow them, we have to understand. These concepts are: number one, money measurement concept, cost concept, real aspect concept, business entity concept, going concern concept, accounting period concept. First I am going through the six, but it is number one, money measurement concept. According to money measurement concept, only money transactions are recorded. Non-money transactions are not recorded. What you can measure in terms of money? I have my own name, Sai. Sai is a brand name. Its value, that only called goodwill, that can be entered. What you can measure in money, that can be entered. Sai Sir is a senior lecturer. Sai is a handsome boy. These are all not required in accountancy, not recorded in accountancy. Understanding? Now, what is the second one? Cost concept. According to cost concept, whatever we purchased, whatever we acquired, its cost only recorded. That means how much we paid for it, that only recorded. Its quality or quantity, size, color, etc., they are all not recorded. They are all not. When you purchased, you got a discount sometimes. That discount, that also not recorded. Actually, how much you paid, that amount paid, that only recorded. Next, following or not? What is the first one? Money measurement concept, cost concept. Now, dual aspect concept. In accountancy, whatever the transaction we are entering, it must be entered in two aspects. One is coming and another is going. One is receiving and another is giving. One is debitive and another is creditive. In such a way, everything should be recorded in two aspects. Now, business entity concept. According to business entity concept, only business transactions are recorded. Owner's personal transactions not recorded. Not only that, in which form you are maintaining books of accountancy, in regard to that form only you have to enter the transactions. Suppose, if it is the bank accounts, in the bank side you have to think away. If you are preparing insurance company account, you have to think insurance company side, not your side. Understanding? So only business transactions are recorded according to this concept. Next, going concern concept. According to this concept, we are assuming that the firm has a long life. It goes on continue. It may not be closed within the coming short period. We are assuming that we have long life. Based on that assumption only, we are purchasing assets, we are maintaining asset accounts, we are maintaining books of accountancy. If not, no need to maintain this now. That's why we are assuming we have long life. The firm goes on continue until it is closed. Next, accounting period concept. According to this concept, all the transactions are to be recorded up to a particular period and then only you have to find the results. You may record all the transactions up to 3 months or 6 months or 1 year as you like to. But if you enter the transactions only for 1 week, how much profit? It is not possible. Today you started the syllabus. At what time syllabus is going to be completed? At what time exams will be held? At what time results will come out? How it is possible? First you study up to a certain period, whether it may be a 3 months or 6 months, whether it is a semester or 1 year. So here also all the transactions are recorded up to a particular period. It may be 1 year or half year or quarterly, whatever it may be. Then only you can find out the results. Then only you can find out the results. These are all called main accounting concepts. And then conventions. Conventions are nothing but they are accounting practices. Here, convention of consistency. Convention of consistency. What it means? Whatever the system, whatever the methods you are following in accountancy, they have to be continued. They should not be changed frequently. Everybody will say you have to change it, but you are saying that don't change the methods. Why? Once you follow the same methods, same systems, automatically you can understand easily. You can identify easily. You can compare 1 year to another year. Suppose take an example. And like this is simple. Following this way only for the last 30 or 40 years. Then only everybody can recognize easily. So is a Sai Sir. There is Sai Sir like that. If I am changing my systems, once t-shirt, once jean pants, earrings, like that if you are doing, nobody can identify. Where is Sai Sir? They will ask me only. Understanding? So, better to follow one method, then only you can compare easily from year to year. You must maintain a particular system. If it is compulsory required as per law, then we can change, no problem. Unless it is not required, no need to change. All the methods. In depreciation, so many methods are there. Straight line method, diminishing method, annuity method. You can choose one method, you can follow. Or in inventory valuation, FIFO method, LIFO method, simple average price, weighted average price. In such a way, so many methods are there. Choose any one you can follow. But don't change the methods what you are following. Understanding? Next, convention of disclosure. according to this convention, the accounts must be prepared in a systematical way and it must give real, clear, correct picture. It should not give any imaginary false picture. There is no question of window dressing. You must give correct picture only. Next, convention of conservatism. What it is conservatism? In accountancy, any future expected losses can be recorded in accountancy. Any future expected losses you can record, but future expected profits are not recorded. Future expected, in the next month I am going to get 1 lakh rupees or 2 lakhs, they are all not recorded. When you receive, then you can record. But expected losses can be recorded. In the next month I have to pay income tax. Write down today only. That is called income tax provision. Income tax provision. Understanding or not? These are all called concepts and conventions. Once you are perfect in these concepts, automatically understanding of accountancy becomes easy. Okay, see you all tomorrow.